In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement. I'm Rick Everett, along with Jonathon McCoy, Financial Advisor with Market Advisory Group. Eye on Retirement is the weekly show that keeps you in the know about all things retirement. And Jonathon, a timely topic, market volatility.
That's right.
There have been a lot of fairly steep ups and downs on Wall Street. And when a period of declining markets is occurring, is it too late at that point to try and hedge against further downturn?
Well, it's a great question. I encourage people to look at what has been your strategy leading up to periods of volatility. And ultimately, for the folks that we're working with, the key is looking at a plan that's going to address management of that volatility well ahead of time, before the next market crisis hits us or correction hits us. Right now we're seeing, like as you mentioned, some pretty significant ups and downs in the market. Not having a strategy to deal with those ups and downs ahead of time is going to cause a few things to happen. People are going to panic. You may pull out at the wrong time and have no idea when to get back into the market, and start making adjustments to your portfolio that really do not adhere to what your longer term plan dictates. But what we find is maybe a lot of people don't truly have a longer term plan other than just hang on and hope for the best. But ultimately, when that worst case scenario strikes, we don't have an element of predictability if we're just going to buy and hold and let the market do what it's going to do with our investments. So our key focus here at Market Advisory Group is putting those proactive management strategies in place well ahead of time to make sure that our clients especially understand how bad can it get and what should they expect during a market downturn.
When somebody decides they don't want to ride it out any further, and they say something like, turn it all to cash for now and hold it. Mm-hmm. What's wrong with that philosophy? Well,
then you're putting yourself in the driver's seat of when do you determine that it's the right time to get back in. Ultimately, it's a risky, I hesitate to even call it a strategy, because ultimately it's not a strategy. If you are reacting to what the market is doing well after the fact, without having a strategy in place, if you had not said that, at this exact point, this is where I'm going to pull out of the market, and you're just strictly reacting based on emotion, on how the market is determining your reaction, then really the tail is wagging the dog. That's the best analogy that I can use in that situation. And when the market starts to dictate the decisions that you're making on your long-term investment strategy, you find yourself in the back seat as opposed to the driver's seat. And most people do wind up well behind the eight ball. And a lot of people that we've talked to that have cashed out, it's been at the wrong time. They didn't know when to get back in, and it's cost them a lot of money.
Can a loss in a person's retirement portfolio affect taxes or tax planning for the year?
Well, that's another fantastic question. So a lot of the folks that we talk to, we're talking to them about long-term tax management. What are some of the things that we can do to make adjustments to help keep Uncle Sam out of our business, in a way, if you want to look at it that way. But with tax management, there is a concept called tax loss harvesting. Unfortunately, if a market correction happens early on into the year, as it seems it's happening in 2020, it's difficult to determine where your portfolio is going to wind up towards the end of the year, when it might be more appropriate to realize some of those losses to help take advantage of a short-term loss to help limit your taxable income. Now, this has a lot to do with whether or not your money is in an IRA, a 401k, or an after-tax style of investment account, where maybe you've taken some savings from the bank and put it into the market to try to take advantage of some of these gains we've had the last couple of years. So these short-term losses, they're very difficult to wrangle and kind of wrap your mind around, as far as, if I sell now while the market's down, is that in any way going to advantage me? Most of the time it will not, because then you're locking in losses. But in some certain circumstances, depending on how your portfolio is diversified, you can actually take advantage of a market downturn through some tax management. But we always recommend talking with a CPA or tax professional, which is what we offer here at Market Advisory Group.
And at Market Advisory Group, it's a holistic approach to retirement. So Jonathon, we've talked a little bit about the investment side, a little bit about the tax side. Mm-hmm. How do those two things come together around a conference table at Market Advisory Group?
Well, they're very intimately intertwined. So most of the financial advisors that both we talk to in our industry and the folks that are coming to us for advice talk to are not licensed to give any sort of tax advice. So when you have questions on, like you just asked, is it appropriate maybe to make some adjustments on my portfolio to help manage a little bit of my taxable situation this year? Ultimately, most financial professionals, or financial advisors, I should say, are not licensed or in the position to give that type of advice. And I would even caution, as I mentioned at the end of my last answer, to talk to a financial advisor that has access to a tax professional in-house. If you're getting a business card for some CPA service down the street, oftentimes you're going to get advice that might be contradictory to what direction your financial advisor might be leading you. That's why we work hand in hand, as I mentioned, intimately with our CPAs, with our tax team at Market Tax Services, making sure that we're bringing those professionals into the conference room with the folks that are needing help from us, so we can have that conversation all at the same time, all in one room, and get those questions answered.
Our operators are standing by right now at 316-252-8707. Again, 316-252-8707. Market Advisory Group offers a complimentary consultation under no obligation to come in and take a look at your investments and where you're at in the process as far as how could we possibly be of benefit. Jonathan, avoidable taxes. There are things such as legally avoidable taxes that many people aren't aware of. Another example of how the CPAs and tax professionals at Market Advisory Group, or Market Tax Services, if you will, come into play around a conference table when planning retirement.
Yeah, that's exactly right, Rick. And a lot of times it's, folks are coming in to say, hey, how can I take advantage of some of these avoidable taxes, or, other tax deferral strategies that we mention on our shows and in a lot of the educational presentations that we put on around various metro areas. And ultimately, there is no magic bullet or specific magic answer to your tax questions. What we've got to do is be diligent about asking the right questions as far as what is your tax situation, what kind of income are you going to need to live on in retirement, are you going to be living in a lower tax environment when you retire than you are while you're working? Because for some of the folks that we talk to, the answer is no, and your tax rate may be higher in retirement than it was while you were working, which sort of can backfire this planning that we do with 401ks, IRAs, so on and so forth. So the key to our process is understanding and asking the right questions. And especially if you're working with a financial advisor, some of the folks we talk to, we send them home with a list of questions. Go ask your advisor on some of these issues and see what kind of response that you get. And if you get the classic response of, we don't practice tax advice, go talk to your tax advisor, or go talk to this CPA service down the street, ultimately that may be the first crack in the wall, if you will, in understanding if you're working with the right financial professional based on a lack of tax management in your retirement investments.
Do you feel that there's people out there that have an investment advisor? Perhaps they've had the same investment advisor for years and years, but they may be getting incomplete or inadequate advice or guidance?
The vast majority of the time that's the case. I don't know that I would meet, or that I would could even think of one circumstance where I've talked to an individual or married couple or even a group of individuals that has come into our office that has said, you know what, I'm getting all the tax advice I need from my financial advisory team. Because most people that we talk to are not working with a team. They're working with specific individuals and individual offices that are not communicating with each other. So you get these disconnects, you get these unintended tax consequences, you get unintended changes to investment portfolios that will negatively impact your tax situation because those individuals, those professionals are not talking to each other on your tax situation, and just blindly making adjustments on investments or blindly making adjustments to your tax management plan without having those two things tied together, it can be devastating long term. It can cost a lot of money.
It is referred to as the ever-changing landscape called retirement. And at Market Advisory Group, with the holistic approach, we're able to bring in the estate planner, the tax planner, along with Medicare advisory services, as well as the investment side of things. It's all under one roof in one holistic approach. And you only get one shot at a retirement, unless you're an athlete, perhaps.
Sometimes, yes.
Isn't yours worth a second look? Set up a complimentary, no obligation consultation through Market Advisory Group. You can go to our website at marketadvisorygroup.com or ionretirement.com. If you have a question to leave us, please do so. As long as we have your physical address, we'd love to send you one of our Ion Retirement mugs. And if you have a question, please give us a call. Our operators are standing by as we speak at 316-252-8707. Again, 316-252-8707. And we'll be back with more Eye on Retirement right after this.
When people work with Market Advisor Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life. And then another thing that makes us unique is we want to meet quarterly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisor Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that we've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Hi, and welcome back to Eye on Retirement. I'm Rick Everett, along with Jonathon McCoy of Market Advisory Group. And in this edition, we've been talking a little bit about the volatility of the market as well as tax planning in retirement. Jonathon, when we see a sustained period of market decline, does that give a pretty fair illustration how the old buy and hold strategy could be obsolete in a modern investor's strategy?
Yeah, and you mentioned modern investors. I think we really have to break it down on an individual basis. What is your income need going to be on your portfolio in the future? And using that to sort of determine what types of investment strategies you're actually using. Because buy and hold for maybe a younger investor or someone who's still got a number of years to contribute to their retirement accounts, it's a little bit of an advantage to continue contributing while the market's going through a downturn, because now you're buying some of those market shares at a lower overall cost. But for the vast majority of people that we work with at Market Advisory Group, they're looking for a more secure retirement so that when we go through these periods of volatility or especially sustained downturns that may take months or years to recover, what is the appropriate money management plan to make sure that you've still got the income that you need to live on, that level of consistency where you're not, as we talked about in the previous segment, having to react after the fact and letting the market determine what your strategy is as opposed to you determining what your strategy is based on a wide variety of market conditions. So having a much more active and tactical approach over the money management for our clients is the key for securing a retirement lifestyle and livelihood for our clients, as opposed to the traditional buy and hold that we're talking about today. It leaves you with a sense of insecurity during a market downturn, especially if you're living on those assets that are losing value during a market downturn.
In times when the market is in decline, what are some of the dangers about people making decisions based on emotion?
Well, emotion and especially fear are the strongest driving, deciding, or decision-making emotions that we have, and fear is never higher than when the market is dropping. There's usually other things going on in the world. Obviously, the last couple of years, it's been very stressful for a lot of people, whether they've lost jobs or seen major economic conditions change in their neighborhoods and cities. On top of that, you throw market declines, and it just exacerbates this issue that can decline your lifestyle. It can make every day hard to get out of bed in a way if you're consistently seeing negative news after negative news after negative news. And if you're letting all of that fear determine what your strategy is during that crisis, you think about, managing a platoon of soldiers in war. Do you want to be running to hide? Do you want to be trying to come up with a new game plan when you're under fire? It can be very difficult to keep your head on straight. And for our clients, the focus that we have is having a game plan in place ahead of time so that we know exactly what is expected of us, exactly what is expected of our clients' money and their investments going into the next market downturn. So we're not having to have to come up with a new game plan and reconstruct things in the worst possible time.
What is the difference in your estimation between a market correction and a bear market?
Well, they go hand in hand. Usually a correction or a drop in any given index or any given stock or whatever we may be discussing of 10% or more is kind of how the news dictates that we're in a correction environment, for example. But really what we find is that corrections can lead to bear markets, but corrections can actually occur during bull markets as well. Bear markets are more of the longer ongoing conditions of more selling than buying in the broad market indexes. So bear markets tend to be what will come into the news and stay for a while. And when we go back to the financial crisis like 2008, for example, those bear markets can hang on for 10, 18, 20 plus months in some cases, and it takes a number of years to recover. So when we're planning with our clients, one of the key focuses is how long can we sustain someone's livelihood and income during a market downturn? Because that really is the key, that income and the income production of your portfolio is the key focus of all the planning that we do. How long of a bear market can you live through comfortably without having to say, okay, now we need to make some adjustments to our lifestyle? And ideally, if you've got a good plan in place, you never have to adjust your lifestyle just because the market decides to drop.
Jonathan, what's the correlation between bond prices or yields and market movements? Mm-hmm. We hear on the news that you referenced, they talk about the bond yields go up, causing the market to go down. Mm-hmm. What's the correlation?
Well, it has to do with the relative attractiveness of different asset classes, and if we simplify it just to stocks and bonds, if you're interested, you can go online and look at the chart of what the stock market did in 2018. And I know we don't have a lot of time to get too deep into the weeds on this today, but when bond yields start to rise, or when the Federal Reserve decides to artificially raise rates beyond these close to zero rates that we've seen for the last couple of years, it causes stocks to become a little bit less attractive because now you've got a little bit higher interest rate available in the bond market. Bonds are being sold at a discount because as interest rates rise, bond prices fall. So large institutions can now start moving large swaths of money that's already been more aggressively invested in stocks than what a lot of these institutions want to be invested in. So they'll pull some of that risk off the table, move it into the bond market to get a little more consistency, a little less volatility in their portfolios, as well as taking advantage of new higher interest rates. But as bonds are being purchased, it can drive bond rates or bond prices higher, rates lower, but that money has to come from somewhere first, and it usually will cause a pullback in stocks. And if interest rates continue to rise, that means that both stocks and bonds could be falling in value at the exact same time. It's a very interesting and a delicate situation to deal with from a portfolio management standpoint.
Market volatility and market downturn, two things that may be lingering in the back of your mind of recent. If you'd like a complimentary, no obligation consultation with Market Advisory Group to see if perhaps you are on the right track or if some hedging could be done to make things more productive for you, please go to our website at ionretirement.com. You can book an appointment right there, or our operators are standing by right now at 316-252 8707. Again, 316-252-8707. He's Jonathon McCoy. I'm Rick Everett. The show is Eye on Retirement, and we'll be back with more right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Welcome back into Eye on Retirement. I'm Rick Everett along with Jonathon McCoy. Eye on Retirement, the weekly show that keeps you in the know about all things retirement. And Jonathon, in our last segment, we were talking a little bit about the correlation between bond prices and market movements. Bonds, back in the day, used to be considered safe haven for investors. And how has that philosophy either changed or stayed the same?
Well, it changes all the time. Now, unfortunately, I say unfortunately, we've gone through a sustained 30 to 40 year period of interest rates falling. And we've been at historically low interest rates for a historically long period of time since the financial crisis in 2008. So ultimately, we have to look at when that starts to flip around, how does the situation change? Can rising interest rates cause the market to go into, in other words, the stock market to go into a period of sideways or very little increase, which can really throw off these long-term projections at how well the market is expected to continue to grow people's portfolios. So we like to focus very much on a wide variety of asset classes because there are many advisors out there that are quoted as saying there's always a bull market somewhere, right? There's always going to be growth opportunity somewhere in the market. It's not just as simple as stocks and bonds. We look at real estate, commodities, oil prices. Cryptocurrencies are a new thing that we don't talk a whole lot about yet because they are still very volatile and speculative in a lot of cases. But looking at the market as a whole, as opposed to just simply stocks and simply bonds, I think is going to be a key focus of portfolio managers here over the next 5 to 10 years as our interest rate environment is expected to change.
Now, Jonathon, you've said before that one of the most common concerns you hear from clients as they're in the process of planning their retirement is running out of money or outliving their retirement. What are some of the questions you hear from people as far as when and how to begin receiving Social Security?
Well, common questions are, my wife's younger than me, or my husband's younger than me, or I've been the higher income earner. Should I just delay taking my Social Security benefit till I'm as old as possible to get the maximum benefit for the household? There's a wide variety of solutions. I lost a spouse earlier in life and I may be eligible for benefits on their record. How does that impact my option to take my Social Security benefits on my own earnings record? Highly common questions across the board. They're all individual circumstances. We've been focusing so much on market volatility and how that can impact not just the value of your portfolio, but how can it impact your lifestyle? Well, when we're looking at all of these pieces of the puzzle from day one, when we're welcoming folks into our offices for one-on-one consultations, which is really the bulk of the time that we spend throughout the day is meeting new people that are looking for a financial plan that includes tax management, portfolio management, investment management, as well as Social Security advice or Medicare advice or estate planning advice if you need wills, trusts, powers of attorney. Having that all cohesively in-house is what we focus on. And throughout this consultation process, we take you step by step from the Social Security to the investments, to the taxes, to the estate planning, so on and so forth, so that we've got the entire process covered and there are no questions left to ask. There's always going to be new changes, new questions, situations will change in your lifestyle. But what we're welcoming everyone into talk to us for today is that one-on-one consultation. Take about an hour of your time, sit down with one of our advisors. We can bring in our tax team and tax professionals. Just give us a call at 316-252-8707. Very simply, we'll sit down, have those conversations, answer your pertinent questions up front, and then if we find an agenda, a reason to sit down for a second meeting, that's also going to be a complimentary part of our consultation process. So you can visit us at ionretirement.com, or as I mentioned, reach out to us at our local number here, 316-252-8707, and we're happy to sit down and talk anytime.
And if a person, maybe they feel that they're all squared away already on the estate planning portion, maybe they just have questions on the tax planning, or maybe they just have questions on the investment strategies, or perhaps they're looking for Medicare advice. A person can come in for an individual consultation on one or all of those, if I'm understanding correctly.
Yeah, if it's just one specific subject. Now, oftentimes, so many of these common concerns are very tightly and intimately linked between taxes, investments, and estate planning. But the answer is yes. We can focus on any one subject, any one question. We just want to make sure that you've got your questions in front of the right professionals that we have in here in-house at Market Advisor Group.
I've got time for one more question, and I want to use it. Jonathan, how important is tax planning when someone's thinking about having their Social Security benefits begin?
It's crucial. We find that it's the biggest and most commonly missed piece in financial planning for folks that are working with financial professionals and that already have financial advisors. These tax questions are not being answered because most financial advisors are primarily concerned with one thing, and that is, where is your money going to be invested? Not how is Uncle Sam going to treat it or what the costs are going to be based on what level of income you're going to be living on. These are all questions that we dive deep into with our tax team to make sure that that one big missing piece is no longer missed. That's what the whole reason we have this entire team at Market Advisor Group available for us.
Jonathan, thanks so much for being with us this evening. And if you would like a complimentary, no obligation consultation, whether it pertains to investment, tax planning, Medicare, or estate planning, please give us a call at 316-252-8707. Our operators are standing by. And always, you can find us at ionretirement.com.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of foundations and its affiliates. The information contained herein does not constitute securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or is excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal and tax advice. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. This broadcast is copyrighted by Market Media Network. All rights reserved. Brought to you by Market Advisory Group. Invested in you. Call 316-252-8707. That's 316-252-8707. Or visit marketadvisorygroup.com.